Well, good day, traders. And Pepperstone are known for having its DNA firmly entrenched in FX markets, although with volatility consistently high in equity indices and commodity markets as well. We've seen real client interest in instruments such as Wall Street, the Germany 30, the Hang Seng, and also markets like the crude markets and also gold, not just in US dollar terms, but also in Aussie dollar and euro terms as well. But I think we need to start considering whether we're going to see higher volatility in individual shares with Q3 earnings season kicking off next week, where we see names like JP Morgan, Citigroup, Goldman Sachs, Johnson & Johnson, to name a few, starting the earnings season in earnest. Consider as well that if we look at consensus number for Q3, the market's expecting a 3% decline year on year in aggregate earnings per share. Now, the significance of that would be the first decline in earnings since the second quarter of 2016. Then consider what's expected going forward and whether the outlooks from corporates will meet up to those expectations, where in Q4, the market's looking for a 3% snapback in earnings, and then you go into 2020, we're expecting double-digit earning growth coming through. The market on a consensus basis is expecting to see aggregate EPS over a 12-month period of $176. The index itself tracks on 16.7 times, which I guess there's a very high equity risk premium built into that situation. But then considering the backdrop by which these corporates are reporting in, rising trade tensions, we're seeing lower trade volumes globally, we're seeing a flatter yield curve, which of course will affect the profitability of the banks. We're seeing a stronger US dollar as well, and I think in that situation it will be interesting to see the outlook for these companies going forward. Well, with this backdrop in mind and the idea that we could feasibly see higher volatility in individual stocks, I think it's a really good time, if you haven't seen it before, to have a look at share trading as a CFD with Pepperstone. The idea that you can go long and short, and for a 5% deposit, get that larger exposure to those US stocks that we all know and we all respect, names like IBM, Google, Netflix, Tesla, and Microsoft, but to name a few. The idea that you can trade in the cash session, but also in the post-market session when a lot of these names report, means that we can be reactive and functional as traders, or to use CFDs as a hedging vehicle as well. So if you want to know more about trading share CFDs with Pepperstone for 2 cents a share, no minimums as well, do reach out to the team here at Pepperstone or have a look at the link below and you can get more information there as well.